Good morning and a warm welcome. Sage here for Kalkine TV, reporting to you live from Sydney, and you're watching the Global Markets Roundup. Let's dive into some key highlights and happenings from yesterday, starting with the US market. And world stock markets rallied on Thursday and the US dollar retreated from one-month highs as investors digested the Federal Reserve's plans for reining in stimulus and worries about contagion from China Evergrande eased, aiding risk appetite. And MSCI's gauge of stocks across the globe jumped 1.06%. As it gained for a third session, the index has recovered all its losses from Monday, when it posted its biggest percentage drop in 2 months. And the benchmark US indices closed higher for the second consecutive day on Thursday, September 23rd, lifted by the positive sentiments from the Fed's economic outlook. The S&P 500 was up 1.21% and the Dow Jones rose 1.48%, while the Nasdaq Composite rose 1.04% and the small cap Russell 2000 was up 1.82%. Traders ignored the weak unemployment data released by the Labor Department on Thursday, which showed new jobless benefits claims rose by 16,000 in the week ending September 18th. Economists consider the rise in benefits claims to be due to Hurricane Ida and forest fires, and not due to the flawed policy action. On Wednesday, the Fed said that it might start withdrawing stimulus support from November. The statement raised confidence in the economic recovery. And the financial stocks were among the top movers on the S&P 500 Thursday, while energy and real estate stocks declined. And stocks of BlackBerry rose 12.08%. A day after reporting quarterly results, its revenue rose to $175 million in the second quarter of the financial year. Let's move on now to the futures and commodities. Gold futures were down 2.05% and silver decreased by 1.71%, while copper fell as well 0.48%. And meanwhile, the Brent oil futures increased by 1.38% and WTI crude was up 1.37%. Looking at the bond market now. And the 30-year Treasury bond yields were up 5.04%, while the 10-year bond yields rose 7.71%. And the US dollar futures index decreased by 0.39%. And now it's time for a short break, but please stay tuned. I'll be back with the Asian and Australian market updates. Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown on the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine. Welcome back. Thanks so much for joining us. I'm Sage and you're watching the Global Markets Roundup show. European stocks rallied for a third day on Thursday as the global sentiment improved on easing concerns about the cash-strapped developer China Evergrande, while comments from the Bank of England kept London shares under pressure. And the Pan-European Stock 600 index rose 0.9%, looking to end the week with solid gains after a sharp sell-off on Monday. And the European bank's ASX 7P rose 2.2% to lead gains. And meanwhile, the London markets traded on a mixed note after the release of the PMI data. And moreover, according to the latest data from the IHS Markit CIPS, the UK manufacturing PMI came out to be 56.3 during September 2021 as compared to 60.3 for August 2021. And the UK services PMI stood at 54.6 for September 2021. Euro area bond yields rose sharply on Thursday after a string of hawkish signals from major central banks, including the European Central Bank and the Bank of England. And Germany's 10-year bond yield rose 0.249%, the highest since early July and the biggest one-day rise since February. China's shares closed higher on Thursday, led by semiconductors and consumer staples, while the debt-laden developer China Evergrande's assurances lifted real estate stocks. And the blue chip CSI 300 index rose 0.7%, while the Shanghai Composite Index gained 0.4%, and South Korean shares fell on Thursday as fears lingered over property developer China Evergrande's debt burden, while investors weathered the prospect of a reduction in stimulus by the US Federal Reserve. And the benchmark Kospi fell 0.41%, and that was current at 6:32 this morning. The ASX 200 rose 1% in the previous session on Thursday, and among the shares paying dividends on Friday are Blackmores, Iress, QBE Insurance Group, Perpetual and Woodside Petroleum. The US Treasury yields jumped following the Fed stimulus taper statement on Wednesday, and the benchmark US 10-year notes fell, pushing the yield to 1.4336%, its highest since early July. And the Australian and New Zealand dollars were on the defensive on Thursday after the Federal Reserve offered a relatively hawkish outlook on the US rate increases, and as investors wait anxiously for news on the China Evergrande saga. The dollar index fell 0.428% after hitting a one-month high, and meanwhile the Australian dollar rose 0.7% to 72.94 US cents. Gold prices were under pressure over concerns that the US Fed could hike interest rates sooner than expected, and the spot gold fell 1.3%, while US gold futures settled 1.6% lower. And meanwhile, the most traded January coking coal for China's Dalian commodity exchange rose as much as 7.7%. In cryptocurrency, Bitcoin last traded 2.68% higher, reaching $44,760 and hopefully you enjoyed our report. But that is all for now, and keep watching Kalkine TV for more market updates. Sage signing off.